Good evening, traders. Welcome to our discussion tonight. We are looking at inside bars trading. This is part of analysis that you can use in checking out potential trades, potential entries, and potential market movements to exploit. With me, of course, Sam. How are you this evening? Hello, Sam.
Oh, hey, Mathew. Sorry, there were network issues. We live?
Yeah, we're live. How are you?
I'm good. How are you?
I'm doing great as well. So, in this conversation of inside bars, I don't know whether there's something you'd want to mention before we start, maybe concerning the markets.
Generally, we had an interesting week.
Mm-hmm.
We know that there are FOMC minutes coming out today. We have CPI tomorrow. So, the Bank of England also came out and said that they're stopping purchases on Friday. So we expect a lot of volatility, especially towards the end of the week. And that's something our traders should be looking forward to take advantage of.
Sure. We had PPI preceding the CPI today, and it came out a little bit better.
Yeah.
So maybe it might lead to a better number tomorrow. We don't know. Let's wait and see.
Yeah.
And all that is going to tie around the conversation of the US keeping on raising the rates, or maybe maybe considering capping, but it's a developing story.
Exactly, because the economy is still doing well, and they're trying to reduce demand because that's the only way you can reduce inflation.
Yep.
But so far, a better PPI means things are still going on okay. So they might have to do more. I think that's the thing of the market at the moment.
All right. So hey Garang, thank you so much. Garang is saying hi. Thank you so much for joining us, and all others were with us. So let's go straight to discussing what we have here. It is the inside bars. When you're analyzing the market, most of the times we are bent towards using indicators and so many other formulas in the charts. But you know, the candlesticks themselves, the information they present is very important. It's like first-hand information. That's what can help you in making the decisions in trading. And it helps you understand the behavior of the buyers and sellers in the market. So basically, an inside bar candlestick pattern, it's where you have a price range that is within the price ranging within the previous period high or low, and we will see the book or textbook example in the next slide. So it's just a consolidation and might show indecision in the market. Then later, there comes a breakout. Okay, so the breakout can be a reversal or a continuation signal, and it's recommended if you can combine with other tools to confirm the breakout that you find, the direction that it takes. So in the next slide, this is what we have. These are inside bars. So generally, you might have inside bars with different candlestick structure. For example, you might have the inside bar with very long wick at the top or a long wick at the bottom. It all depends. But so long as it's forming within the highs and lows of the previous candlestick or the preceding candlestick, then it's an inside bar. Sam, you have anything to add?
Yeah, so basically, when you're trying to trade, you're trying to take advantage of movement. And an inside bar is simply a pause in that movement. So when you see an inside bar preceded by a larger, very bullish or bearish candle, then in this case, you know that the market is deciding where to go next. Yeah. So that's what it tells you. There is potential for more momentum, but then they're yet to decide which direction the market is going to take. And that's very important for a trader because the market moves in impulses and consolidation and impulses and consolidation. So this is one manifestation of that. And if you're able to understand how exactly or to easily spot these patterns in the market, along with other signals or other indicators and tools, then you have a greater advantages of knowing where exactly you're going to begin trading in the charts.
Yeah, there are lines I've put here, some, and if you identify these inside bars in a higher time frame, when you move to lower time frames, you might realize some other patterns that we commonly use, like wedges and such. So there are events where you might have, let me just try to draw. You might have, sometimes you may have this inside bar forming on the upper side or the lower side. That one is going to influence the type of pattern which you're likely to find on a lower time frame. For example, if you have this, if this is the mother candlestick, then you have the inside bar forming on the lower side, and with a wick, maybe something like this, it might be this type of a wedge forming. If, for example, you have that inside bar forming this type of a structure, and you have it on the upper side, then you might find another type of pattern for maybe can even be a flag or something. So they are usually accompanied with other patterns that you can see, or that we usually use in trading. So these are, yeah.
Because I know everything in technical, especially price action, everything is interconnected. Yeah, an inside bar on a lower time frame is probably a triangular pendant formation. Yeah, you see things like a shooting star or a hanging man is probably on a lower time frame. You find maybe it's an engulfing candle. So once you get the flow of how price is printing on the market, then you can seamlessly switch between time frames while understanding what is happening. The market.
Yeah. So what traders should note is that the high and the low of the inside bar should be completely covered by the previous candle high and low. And we consider the weak highs and the weak lows. They are the ones that inform on whether it's a perfect inside bar or not.
Yes, Mathew.
Yes.
Before we go to the charts, can we have multiple candles in one inside bar formation? Multiple inside bars?
Yeah, it's possible. We will check out on the charts and see how they actually form. Actually, if we look at this pattern that we have here, and this is an inside bar continuation pattern. Thanks for asking that question, Sam. I can easily single out this one here. Check out where I'm drawing. Do you find we've got this candlestick, that bullish candlestick, and we have got two small bearish candlesticks which have been just inside, basically forming inside this candle. So these are two candles, and they're like inside bars to this one. Yeah.
Exactly.
Yeah. So it's like when you want to understand these structures, you are looking at the behavior of the buying and selling activity. Yeah, in this case, it's where you have previously there was high momentum, high volatility in the price movements. All of a sudden, the momentum subsides or decreases, and then it's like form of indecision. It's kind of a lower volatility, and of course, when you're in the market, it's more of low volatility, times of low volatility. Then there comes times of higher volatility, moderate volatility. So that's the meaning. So if traders understand the meaning in terms of the activity in buying and selling, then it becomes a little bit easier. Yeah.
Exactly. So in this case, we have the previous larger candle that tells you buyers had pushed really strongly the market.
Yep.
Then you have these two small candles that are telling you that sellers are trying to come in, but they're not as strong. Yeah. And that's why you have the two small candles. And then from there, what you need to wait for is a confirmation that your theory is correct. Probably with a breakout is what we're going to do right now, or something of the sort.
Yeah. So looking at the first scenario here, the scenario 1, let me just label it 1. Here we have this candlestick inside, which I've just put an arrow. That's when it's the inside bar. It is just forming in between or inside this bigger bullish candlestick. And how someone should trade this one is you look at the high and the low of the preceding candlestick or the Mathew candlestick, and then the direction that the price break is where you're going to enter the trade. Like for instance, this is where you would have the entry to the upside. That's why someone would buy to the upside, right? It is much easier to identify inside bars for a continuation than it's easier to trade with the inside bars for the continuation than other patterns. Yeah. We can find several of them. I don't know whether we can find one on a reversal. Yeah, there is something here as well. This one will be for a reversal, but we check them for a reversal. Let's just go with the ones for continuation. The second case here, you see we have this bigger bearish candlestick, and just inside it we have a small bullish candlestick, that small bull inside there. So the entry would be at the break of the low of the Mathew candle. It would be at this point here. That's where a trader would get a confirmation trade to sell, a confirmation signal to sell at the break of this level here. And you can see some profits. This could have been some profits because there was a big move to the downside.
Yeah, I think one very good use case is sometimes the market tends to be very volatile, yeah? And we have a case where we see a big bullish or bearish candle, like the one in scenario 2, and you've missed the first move. So now the question becomes, where should you enter next? And that's where the inside bar comes in and give you a proper entry level for your trade.
For the continuation, yeah. For the continuation. Actually, if someone is looking for a good entry in a continuation, you don't enter when the volatility is really flying high, because you might get a very fast reversal, yeah, and then have your trade on a week. Okay, so mostly it's good to wait when because market moves with impulses, and then it takes a little bit of the breather, then takes another impulse. So these inside bars as well can be a representation of a reduction in volatility or a breather in a trend, and that could be the best point for entry. So for the guys who are looking for continuation of the trend type of scenarios in the market, is a good tool to use, the candlesticks. And mostly for the traders who are not, or who feel that using the indicators is just cluttering their chart and maybe making their judgment a little bit cloudy, then working with these candlesticks purely, looking at them and studying the behavior of the price movements might be easier or better. Yeah. Now let's check out for reversal patterns. In this case, this one, by the way, is I've pulled this one from gold. This is on daily. The other one was from this is XAUUSD. Yeah, the other one was from I think Euro USD. So for this one, look at this reversal, yeah, and you realize there's this small candlestick inside there, and right after the break, this level here is where a good reversal, where an entry to the upside could have been, and you can see there was quite a strong rally to the upside. At the same time, and this is the question that you asked me previously, Sam, whether you can have several candlesticks acting or forming an inside bar pattern. Yes, we can have multiple of them. Looking at these two, we have this strong bearish candlestick, then we have two candlesticks here, and then they are formed just right within the high and low of this candlestick. And we even have another candlestick being an inside bar of this hanging man here. This candlestick's a hanging man, right? And then after that, this downward move, by the way, is currently on course on gold. This is a daily chart. I think after this, we'll go to check them out on the charts. This is a daily chart for gold.
That's very interesting. Especially, you can see that there are the entry point at this point is outside of the whole formation, outside of the bigger candle, at the close, or is it at the breakout?
It's at the break. Like for example, here, this is where the entry would be to sell at the break of this candlestick. Actually, at this candlestick here, at the break, maybe right after the close of this candle, because it's always better to enter trades at the close of a candlestick, because you never know, it might end up being a pin bar again. So at the close of this candlestick, where someone could have entered and you could have just gotten all this profit. And I think this trend is still on course because gold is still bearish. Yeah, with the rising rates and all that.
Yeah, we have 4MC. I don't know if it's happened already or it's yet to happen.
Minutes. The minutes are coming up at 9. I think we've got 40 minutes to go.
Okay.
Yeah. Okay, and I think now we can jump to the charts. But before that, I would want to mention that with price action and these candlestick patterns, actually, they would work better on higher time frames. Talk about 4 hours, talk about daily, and sometimes even on 1 hour. But if you can see these patterns on a higher time frame, the better. And mostly would recommend 4 hours and daily, because once you are able to understand the bigger picture, the idea, you get the idea on what's happening from a higher time frame. That's where you're likely to understand what the big players are doing in the market, and it's going to save you the agony of doing multiple analysis on lower time frames, because once you analyze the market on a 15-minute chart or 5-minute chart, within a very short time, the structure works, and then you have to start analyzing another pattern. If, for example, you get this analysis here, and you just place a trade based on this one, then it's just like a full day, several days of waiting for your trade before you close. Yeah, you have the idea on what the market is moving from a very high time frame to have a big picture.
Exactly.
What do you think about that, Sam?
There is less noise as you go higher, and also as you go higher in the time frame, you get that there's the macros tend to align more. Macro fundamentals tend to align more when you're in a higher time frame. And the lower scale, it's more of a minute to minute or hour to hour demand and supply dynamics, which tend to vary quite drastically. But as you go higher, then more traders observe higher time frames, and then it's sort of a less noisy environment.
Yeah, and something, considering, for example, that we got a trade here, and here we're talking about this one is a, let me remove all these drawings and you can talk about it. At the confirmation of this candlestick here, if someone entered on this, the beginning of this candlestick, you see this is a lot of pips here. This is a very big movement the whole day. Yeah, because we have one candlestick moving in favor of this trade, this confirmation which you're getting here. But imagine if this one was 5 minutes and you have got one candlestick moving in favor, that could be like maybe 5, 10. If it's a big one, 10, 15 pips, something small. But if you get this type of a confirmation on a higher time frame, for example, this is quite a lot of pips. We can calculate them. We just try to find them on the charts, because we look at this we look at this structure on the charts on the MT5. That's what I actually want to share right now.
I think maybe, correct me if I'm wrong, but what you're trying to say is if you're in a higher time frame, then it's easier to get the next candle correct, because you only need one candle.
Actually, with just one candle, then you have quite a good move. Yeah, you have quite a good move. So on Euro USD, we can check out for those scenarios in this chart, right? So that traders can, let me go to a higher time frame. This is daily. Try to zoom out a little bit, see where we can find inside bars. And here is a case somewhere you asked me, can we have multiple of them? Yes, of course. I want to highlight this part here. Let me use an object to highlight it. This candlestick here. You see that? You got several inside bars there. Yeah. And that is why I was mentioning that it is always good to understand the concept behind the inside bars. You're trying to check out where there is consolidation or indecision. The price is not able to make big moves after that. It's not able to make big moves. And the direction of breakout is likely going to be the direction of your trade. Like in this case, at the break of this level, then you can see how the movement was big downwards. This is now for continuation. Yeah. So inside bars doesn't have to be like a single candlestick, can be several of them, so long as those candlesticks are forming inside a Mathew candlestick or one big candlestick, preceding candlestick, which seems to have a bigger movement, and then there is momentum subsiding a little bit. Yeah.
Yeah. So if you were to move to a lower time frame.
Oh, just at the same point. Let me just move, no worries. Okay. And I am now getting an idea of a bearish flag. Yeah, let me go to 1 hour. Let me even move to 1 hour. This is where I got the, you see, that's where I got that example. Let me just move to exactly that part where we had marked. See whether we had a bearish flag. Where is it now?
You marked it?
I did not mark the date. Let me go back, then find it. Oh yeah, let me just mark the date. It's supposed to be 16th May. 16th May. Go to 1 hour. 16th May will be around where? Really? No, it's 10th June. I don't know why I'm not getting it when I go to 1 hour. I'm not really getting it when I go to 1 hour. I don't know.
You just go back.
Yeah, going back.
No,
here we are. Oh, it's at the beginning of June, 16th June. Let me go to 1 hour. See whether I'm able to find it. Oh yeah, here we are. This is in 1 hour. And if I try to draw another structure, you'll find there was some consolidation here. More of a bearish flag, right?
Yeah.
Yeah. This is exactly what we were saying, that an inside bar, when you go to a lower time frame, you're going to realize another pattern that you can use. This is a very nice setup, and it's just acting like a waterfall, like a textbook example, right?
Yeah.
So this is awesome. This is awesome. After a very big move, then there is this consolidation, then strong move to the downside. And on 1 hour, that is where I'd gotten the examples which you have used there. Let me just show you. Even on lower time frame, like 1 hour, you can find them, but it's always better if you can find these setups on a higher time frame. These are the continuation ones, and you can see the setups that you have used there. Continuation pattern to the downside. Here we have this inside bar, and you can see how the price tumbled with some very good reward down here. So if you're entering trades, it is advisable you enter right at the break of this one. Then you can have the stop loss at the high of the mother candlestick, and this one would be better in the event that you're considering the volatility around that instrument. Yeah, because you never know, there might be some pullback to that area again. This one would be safer, but sometimes you might want to have the stop loss at the high of the inside bar if you're really very conservative with the risk. Okay, or you can have it at the high of the mother candle. Okay,
what's your typical risk reward in this case? Like, what will you consider a good risk reward in case someone decides to try the
I think if it's in line with the trend, you might go for something bigger. But I think I would want to say if 1:1.5, 1:1.5, or
That's a
maybe use
good
the or the golden Fibonacci ratio.
Yeah, because I'm thinking the reversal trade might have a higher risk reward than a continuation trade.
The reversal?
A reversal inside bar trade.
Okay, not sure about that. Maybe not sure about that.
Because you're at the start of a trend, it's reversing. So it might give you a higher risk reward. Whereas for consolidation, for continuation, you might want a 1:1 or 1 to 1.5.
Okay. So I think some I don't know. Okay, 1:1.5 is most of the times is easily attainable.
Exactly.
Like for example, at this point here, if I just get a stop loss at this, by the way, it will depend with where you put your stop loss. Okay, yeah. If you're very conservative, then you're talking about a bigger reward, because this one, we're talking about this around 25 pips, and then this one went all the way to around 50 pips. So one is a double reward at that point. But if you are taking the stop loss at the low, then you're talking about 45, 1:1.5, maybe to 60. Okay.
Yeah.
Something like that. But you see, I also interact with traders, and you see, you also have got very good traders coming up in my sessions, and you get ideas that there are traders who prefer to get whatever the market is willing to offer. Like when you're talking about have the objective, and once you hit your objective, then take it and be contented for that day. Then the traders will say, wow, if the market gives me 100 pips, why am I going to take like the risk reward of 1:1.5? It's a good concept, by the way, but then the concept that one is likely to use is to trail the stop.
Yeah, that's better. Because generally speaking, in a continuation move like this, you'd want momentum to be in your favor. You wouldn't want momentum to reduce, because it's just a burst of momentum and you're out.
Yeah. So there are good ideas. I mean, trading, there's a lot of ideas around trading. I think one of the challenges that traders have is having to deal with so many choices. When it comes to managing the trade, there is a whole list of opportunities, whole list of choices one has to make, right? When it comes to entry into the market, placing the stop loss, a whole lot of different choices one can make. And those ones is what brings the difference on the success of a trader. So sometimes it's good to stick to what seems to best work in your case, because that's how you're able to form your own, to master your own craft and have something which is not stressful, something you can repeat over and over and over. Yeah. Okay, so I think up to that point, we come to the end of this presentation. Yeah. Thank you so much, guys, for taking your time to attend. Keep up to speed with the market events. Use these indicators. Something I'd want to mention is don't use the inside bar on its own. Make sure you add something else. Okay. Combine maybe with those type of patterns. Like for instance, we've mentioned that once you see an inside bar on a higher time frame, make a point of checking on lower time frames. You might find another type of a pattern. Maybe it's a bearish flag forming, and maybe you're using another indicator that can confirm the momentum or something like that, or the beginning of a trend. It will really work to give you more confidence in your execution.
Yeah, I think even apart from our technicals, you can use fundamentals, because most of the times when you have a news event, for example, the first candle is usually almost impossible to get into. So that's where you can use the inside bar to sort of get another entry into the direction of the market. So yeah, it's a very versatile tool, but it's recommended you use it with something else.
Okay. All right. So let me look at the panel here. I mean, we didn't have much of the comments today. Thank you so much, guys, for coming. I think it was quite a simple concept. And by the way, to trade successfully, you don't need very complicated ideas in the market. You need something very straightforward, something that you can just check and find an entry, and you're done. So
something that you can constantly repeat without.
Yeah, I don't have to spend a lot of time trying to find that signal. All right, so with that, I think we can wrap it up, Sam.
Yeah, I think that wraps it up.
Okay, all right then. Thank you so much, everyone. Let's go and check out the minutes that come up for the FOMC. There might be some volatility coming up in a few. Okay, all right then. Bye, everyone. See you next time.